Well, back with another one, eh?
How about a couple of carrots for this rock, Pierre?
Gold surges to new all-time highs amongst stock market volatility and uncertainty. So the big question is, what does it mean for you and me and our money? So if we want to get a better handle on what's happening with gold and how it affects people like us, let's take a look at a little bit of a deeper dive into this. So gold's record high performance as of like March 31st, 2025, gold prices have reached an all-time high, with spot gold reaching $3,126.06. This surge represents an 18% increase just this quarter, making it the largest quarterly rise in over 38 years. So, what are the contributing factors? The escalation in gold prices is primarily due to growing concerns over U.S. President Donald Trump's recent tariff announcements, which have heightened fears of potential economic downturns. Additionally, a weakening U.S. dollar, which eased by 0.2%, has made gold more attractive to non-dollar investors. So, let's try to put things into a historical context, because sometimes that helps us when we hear little bits and pieces of news. So check this out. As we know, gold is always considered a safe haven asset. Historically, during periods of economic uncertainty, investors have flocked to gold as a reliable store of value. The current surge mirrors past behaviors where political tensions and fears of inflation have drove investors towards gold. Central bank purchases are another factor. Central banks, notably China, have been increasing their gold reserves to diversify away from the U.S. dollar. The strategic move has further bolstered gold demand and contributed to its price escalation. So what are the implications for investors like you and me? The bottom line is there's an impact on investment portfolios. The surge in gold prices indicates a shift in investor sentiment towards risk aversion. Translation, they're trying to get off the risk of the stock market and go into something that always seems to hold value, which is yellow metal like gold. Traditional assets like stocks may face volatility, prompting investors to seek refuge in tangible assets like gold. So the bigger question is, where is the money going? Where is the smart money going? Mining stock performances, if you talk about gold mining companies, they've seen some substantial gains, with the Van Eck Gold Miners ETF rising 34% in 2025 alone. This uptick suggests that investors are not only buying physical gold, but they're also investing in companies that produce it. That's huge. So let's talk about actionable strategies. What are people like us on Main Street doing to participate or maybe avoid gold at this point? So there's something called diversification. It's probably not the first time you've heard the word. So consider allocating a portion of your portfolio to gold or gold-related assets to hedge against economic uncertainties. This can be achieved through physical gold purchases, gold ETFs, or shares in mining companies. Also stay informed, because there's other questions that we have as well that comes along with us. We don't want to be the last person in and the last person out when it comes to this type of an investment. So staying informed really means that we're keeping abreast of geopolitical developments and monetary policies, as these can significantly influence gold prices. Being informed enables you to make timely investment decisions. And while we're at it, I hear and I see gold advertised all the time on television. These companies offering for you to buy their gold. And I've always had the question in the back of my head, if you are buying physical gold and there's an opportunity to sell that physical gold for profit, how do you do it? And maybe equally as important, do these people charge you money to handle your gold and keep it in reserves? Finally, I have other questions. Akin to gold is other precious metals like platinum, palladium, and the poor man's gold, silver. I've noted particularly that silver has not enjoyed the same type of success, at least not yet. So my question is, maybe if we are latecomers to the gold surge, is there an opportunity for silver to have a nice run as well? Silver, when we're talking about the value in today's $20-25, is still a relatively inexpensive purchase. But with any type of a precious metal, it's not just holding the precious metal, it's when do you, how do you get rid of it? And that's the question. And those are the types of questions I throw out there to my listeners and my viewers because you're super intelligent. You'll have insights here that maybe some of us don't quite see, some of us don't quite understand. So leave your thoughts in the comments below because I love your participation. You have super intelligent thoughts, super intelligent insights, and maybe strategies that we need to have discussed right here on this channel because this channel is your channel too. So in conclusion, navigating market volatility requires informed and strategic decisions. Remember, I'm just a guy on the internet. I am no expert, but I do share tangible information with you, which we kind of analyze together. Understanding the dynamics behind gold's price surge empowers you to adjust your financial strategies accordingly. Remember, diversification and staying informed are key to weathering economic uncertainties. And I'll ask you, have you considered adjusting your investment strategy in light of the recent market changes? Is gold still cheap at $3,100 an ounce? Is silver the new investment? Or is it time to unload these things because they're at all-time highs? Share your thoughts and questions in the comments below. Let's discuss how to navigate these turbulent times together. And once again, remember, hit like, hit subscribe because I love to work with you. I love to have your input and your comments. And most of all, I want to make sure you're receiving this information on a daily basis right to your inbox. Until then, just remember, the biggest battle we fight is the one between our ears. Have a great day.